what managerial accounting decisions can look like and how it can affect the firm. And I gave you two kind of real life case examples in Tesla and in BYD. Right? So how do we first think about the differences between financial accounting and management accounting, right? There was a slide like that I introduced in class, okay, which I will now go through. So the purpose of financial accounting, right, would be to provide information about the financial position and performance of the company. So financial position, we can see from the balance sheet, as at the balance sheet date, how much cash do we have, how much AR do we have, what is our total retained earnings, okay? And financial performance more or less pertains to the performance for a particular period, right? So this is typically seen from the income statement, meaning from 1st of January 2025 to 31st of December 2025, what is the net income that we earned, right? What is the total revenue, total expenses, so on and so forth. On the other hand, for management accounting, right, the purpose is really to provide internal information to the management because they want to plan and budget for the next year. Okay, so they're going to look backwards from 1st of Jan to 31st of December, right? How did the individual units or the individual departments actually performed, right? So they want to evaluate and reward those departments with good performance, right? And they also want to plan for 2026, right? To forecast their sales and to adjust their business strategies, so on and so forth. Okay, now in terms of the types of reports for financial accounting, the main output would be balance sheet, income statement, and statement of cash flows, which I guess you guys have seen when I asked you to look at the annual reports of Tesla and BYD, right? So those are typical types of reports under FA. However, for management accounting, there is no standardized format across firms. In fact, each firm would choose the format that is most useful for their own decision making, and they would produce reports accordingly. Right, so under FA, we typically follow IFRS for the majority of the world, and of course, in the US, they follow the US GAAP. Right, under management accounting, there is no standardized way to produce the reports, and that is because there are no commonly accepted standards under management accounting. Okay, so for the reporting entity, FA would be usually viewed as a whole company, right? And then we would present the annual report. Whereas under MA, it can be broken down into product lines, geographical areas, divisions, departments, whatever units that the management think is most suitable to evaluate performance. Now, for the time period, right, FA is typically going to be a year, a quarter, or a month, depending on what are the needs of the external stakeholders, right? Typically, for publicly listed firms, we expect them to report quarterly financial statements, right? Whereas for MA, it can be as minute as weekly, right? If I want to monitor the performance of my supply chain, I might require weekly reports to keep updated on how my supply chain efficiency is moving along, or it could be the entire year where I want to see how my sales is doing as compared to sales forecasts. Now, finally, for the users of FA, that would be investors, creditors, and typically parties external to the firm who want to evaluate the firm performance. Whereas for the users of MA, it is typically top management, customers, and others in the value chain, your suppliers, your customers, people who have a vested interest in how your firm is being run internally. Okay, so this is kind of a broad overview of the purpose of FA versus MA in accounting. Okay, so in our MA sessions, right, I also introduced this graphic where we kind of try to summarize what are the different costs that a manufacturing company could face. Okay, so for a manufacturing company, they are going to produce goods in-house, right? And so on the kind of FA side of things, where we only see the total cost of operation, right? In actual fact, it is broken down into a lot of different components, which in our MA sessions, we tried to go through. Right? So in terms of operation costs, we would have first up the product cost or the manufacturing costs. All these directly pertain to producing the goods and that the company wants to sell. Right? The second kind of cost would be what we call the period cost, or more or less the fixed costs, which is those costs that cannot be directly attributed to a specific product. Right. Furthermore, for product costs, there could be direct material, right? So for example, we manufacture a bicycle, so the direct rubber, the direct metal steel bars that we buy, those direct materials that goes into manufacturing the product would be direct material cost, right? Direct labor would be the labor used for the assembly men to assemble the pieces together. And finally, we have manufacturing overhead, right? Typically, manufacturing companies would have kind of factories, right? So electricity to run the machines, security guards to man the factory. These would be considered manufacturing overhead. Right? Of course, for manufacturing overhead, we would then further classify them into indirect materials, indirect labor, and other manufacturing overhead. So let's kind of go into more details on each of the different product cost components. Okay, the first would be direct materials, as these are the raw materials and component parts that become an integral part of the finished products, and they can be directly traced to the products manufactured. Right? So in the class example, right, I talked about Conquest Inc., where they produce mountain bikes. Okay, so some of the direct material examples included would be the tubes for the bicycle frames, the brakes, the pedals, the tires, so on and so forth. Whenever we try to track the cost flow, right, we would do the following. When we purchase materials, we are going to debit materials inventory, credit cash. Right, so if you see the T account of the materials inventory over here, we have purchase of direct materials, debit. Now, when the employees actually use up these materials in production, we are going to transfer the balance from materials inventory to WIP inventory. Okay, so I'm going to credit direct materials from materials inventory and debit WIP inventory to show that it has been used and therefore transferred into WIP inventory. Now, on the kind of balance sheet, of course, we would show the breakdown of inventory. Materials inventory is one line item, WIP inventory is one line item, and finished goods inventory would be another line item. Okay, so in terms of direct labor, right, these are labor that includes those who work directly on the products being manufactured, either by hand or using machines. Right, so back to our conquest example, direct labor would be the wages for the cutters, right? So for example, you buy a very large tube of steel, right? You have to cut it to the correct handlebar size for each bicycle, right? So those cutters, right, the painters of the steel bars, the assemblers, the packers, and the welders, all of these would constitute direct labor. When we pay the workers, right, we are going to debit direct labor, credit cash. And when we are tracking the employees working in production, right, we are going to credit direct labor and debit WIP inventory, right? So as you can see, WIP inventory reflects what is the total cost being incurred when we are working on manufacturing these products and services. And WIP simply means that it is still in progress and it has not been completed. Now, we also talked about job order costing, right? And the kind of the main goal of job order costing is to figure out how much overhead to apply to each job, okay? So the cost of a job would be direct materials, which we went through, plus direct labor, plus manufacturing overhead, okay? So how can we trace manufacturing overhead to each particular job, right? One possibility is to use the overhead application rate times the activity-based units used, right? The overhead application rate is typically determined at the beginning of the period based on this calculation over here, right? Where overhead application rate is simply the total overhead cost divided by how many units we expect to produce for that activity base. Okay, so in this example, right, CompuLine Core, they develop customized computer software programs for other companies, and we assume that at the beginning of 2021, the management makes the following estimates for the coming year. Okay, so total overhead cost would be $360,000, total direct labor hours would be 30,000, and total line of code that they produce is 1 million lines of code. Okay, so option A, suppose that the company uses direct labor hours as overhead application rate, right? So I'm going to take total overhead cost of $360,000 divided by 30,000 hours of labor. That would give me $12 per labor hour. So if job A uses 100 direct labor hours, I would be taking $12 per hour multiplied by 100 hours equals to $1,200 of overhead cost. Okay. On the other hand, if job B is more kind of labor intensive, it uses 200 direct labor hours. I will take the rate of $12 multiplied by 200 hours equals to $2,400 of overhead manufacturing cost. Now, continuing the same example, in option B, the company could also choose to use the lines of code as an activity base, right? And in this case, I would take the total cost of $360,000 divided by 1 million lines of code. That would give me 36 cents per line of code. Okay, in job A, it produced 1,000 lines of code, which would be calculated as 36 cents per line times 1,000 lines equals to $360. Now for job B, right, we use more lines of code at 3,000 lines of code. So we would use the same application rate of 36 cents multiplied by the output of 3,000 lines of code equals to $1,080 overhead manufacturing costs assigned to job B. Okay, so we can see that for job order costing, right, one possibility is to use the activity base, right, to calculate the application rate, and then take the application rate multiplied by the actual activity used for each job in order to allocate our manufacturing overhead. Now, the last thing that we talked about under kind of manufacturing costs would be activity-based costing, or ABC for short. For this particular allocation overhead method, right, the difference is that we use different overheads for different types of activities. Okay, in the previous job order costing example that I talked about, we simply use line of code for as a simple way to calculate manufacturing overhead for the entire job, right? But in practical sense, right, one job can consist of different activities, and so ABC says that we should use different overhead rates for the different activities per job. Okay, this is because different indirect costs can have different cost drivers, and ABC can better help managers understand what are the different activities driving the overhead costs. Okay, some examples of cost drivers would be supervising direct labor, setting up machinery, or consuming electricity. How do we do ABC, right? We went through this example extensively in class. So the step one would be to subdivide overhead costs into the number of activity pools, where each pool would represent an overhead activity, right? And the second step would be to apply overhead cost in each pool to production separately for the pool. Okay, for the purpose of the final exam, right, I would always give you the total cost per pool. I will not ask you to calculate the overhead cost, right, but that would be directly given to you. So you can simply focus on step 2 in the preparation of your final exam. Okay, so therefore, I'm going to only go through this slide for step 2 under ABC, right, which is to allocate activity cost pools to the different products. Okay, so something like that could be given to you where I tell you that there are 4 different cost pools involved in this particular job, right? The first, we would have the repair cost pool where I allocated $108,000. Second cost pool would be the setting up cost pool, which is allocated $72,000. Third cost pool would be heating, right? That is $24,360. And final cost pool would be machinery, which is $45,240. Okay, so after the cost for each pool is being allocated, we would then see what are the different cost drivers for the pool and how should we allocate it. Okay, recall in this example, right, we were producing metal cabinets and wooden cabinets. Okay, so in the repair cost pool, we found that 250 total work orders were given to the repair department to ask them to repair the cabinets, right? And of 250 orders, 200 orders pertain to metal cabinets and 50 orders pertain to wooden cabinets, right? If we take 200 divided by 250, that would be 80% of the cost being allocated to metal cabinets, and that is $86,400, right? And the remaining 20% is allocated to wooden cabinets, which is $21,600. For the setting up cost pool, right, we figured out that we needed 200 production runs, of which 150 runs pertain to metal cabinets, 50 production runs pertain to wooden cabinets, right? And then we would allocate the cost accordingly to the percentages. For heating cost pool, right, the total heating space area is 40,000 square feet, of which 34,000 square feet was for storing the metal cabinets, right, or producing the metal cabinets, and only 6,000 square feet was for wooden cabinets, and then we allocate the cost accordingly. Finally, for machine hours, right, we found that the machine had to run 50,000 hours, of which 45,000 hours was used for the purpose of metal cabinets and 5,000 hours was used for the purpose of wooden cabinets. Okay, and finally, how do we allocate it to the different product lines, right? We simply add up anything that pertains to metal cabinets from each cost pool, right? So that is 86.4K over here, 54K, 2706, 40716. I add all of the different costs pertaining to metal cabinets, right? Then I divide by the total metal cabinets that is produced, which is $4.81 per unit. This means that for each metal cabinet that I produce, the manufacturing overhead being allocated to each metal cabinet should be $4.81. All right. Same goes for wooden cabinets. Add up the different costs allocated to the wooden cabinets across the 4 different cost pools. Divide by total 9,000 wooden cabinets that is being produced. That gives me $5.31 per unit. Okay, so all these kind of the past 28 slides that I've described are once again the most important parts that you have to learn really well in preparation for your final exam. But of course, the important caveat is any kind of a slide that I went through in class is part of your exam syllabus and could potentially be tested. But for the purpose of revising for your final exam, I would recommend that you start from this particular deck of slides, right? And after you finish this particular deck of slides, I would then recommend you go through each week's class slides, right? And then go to the practice questions at the end of each week's class slides and try to redo those questions without referring to the slides, right? I recall that in class, right, you could always refer back to the class slides in order to practice those questions. But for the purpose of your revision, I would say refrain from referring to the class slides and see if you can actually complete the questions independently, right? Only after you are sure that you can finish the practice questions individually, then you should do the 2 different mock exams that I've uploaded. One was uploaded during the Chinese New Year period, and the second has been uploaded under today's class. Both practice exams, kind of difficulty level is similar to the final exam, and you should try to do them without referring to the class slides, okay? And that is kind of how you know that you are more or less prepared for your final exam. Okay, I should stop the recording here.